Hey guys, welcome to this video. In this one, I'm just going to run down the Australian dollar and the Japanese yen. Happy New Year to everyone. We've come into this new trading year to really look to secure those consistent gains, manage our portfolio correctly in terms of risk and capital management, and just not take stupid trades. We need to make this year a very accurate one. So of course, if you want to get started with me, go ahead, look in the description, grab the free training, and let's go. So in this example, I'm going to run down very simply on the AUD dollar Japanese yen. Anyone who watches me, anyone who knows me, is that I make it so this kind of thing is explainable to anyone. If you want anyone to grasp an idea or you want anything to work well, you're going to need to break it down into a process that's factual, logical, and has sense to it. And often complicated things, they lose that sense because they get harder and harder and harder, and you're really not looking at the picture in the right way. That picture needs to be clear. You need to go into the markets every day and understand fully what you're looking for and what you're doing. And there's a good representation of that, of course, on every chart I choose to pick, because those are the charts we really like to trade, when we can look and see what's going on and take good informed decisions. So if I kick it off on the monthly, of course, as many people will know, if you watch my videos lately, if you haven't, go back and look through them. There's so many of them. We came right off this low around the time COVID started, and at that point, the yen starts to lose value and the Australian dollar comes up, and that was consistent across yen pairs. Okay, you had that with the dollar yen, for example, that massive rally, the euro yen as well. And eventually, this has to stop. As you'll know, again, if you follow me, these things just cannot go on forever. Eventually, they're going to have to end. It's unsustainable for the price to go up and 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 up, because it causes economic issues based on imports and exports and the value of these currencies, right? Okay, and if you want to read more about that, you can, but mainly the idea you need to understand is these can't go up forever. Eventually, sellers are going to move in and they're going to knock the price down, whether it's from government intervention or it's people just liquidating their assets or liquidating their contracts because they're happy with that price that's moved up. And then those sellers, those short sellers like myself, start to come into the market. Now, why did it reject here? Okay, there's a good reason for this. And when you get these extreme markets, looking on a yearly chart can actually help sometimes, because you can see price action levels a little bit better. So if I flick to the 12-month, okay, so every year, you can see the price rallies up and it's consistent with these previous levels. So this is where price got rejected before, okay? And this is also where price got rejected before. And you can see a bit of consistency here, right? And it's all along here. Now, what is a little bit more significant is if you look back here, where this candle wick is, okay? So we're going all the way back to 89, long time, but it's an extreme price, okay? You hadn't hit this price for, sort of, 8 years now. It's 2023, okay? So that was 7 3/4 years. And you touch back and you can see, look, back on the market, you can see how many times we reached up to these zones and came away, okay? And that is just simply because the levels here are reactive levels. They're levels where people want to short. So using that 12-month does help. Now, more significantly, you can see the candle wick ends on this candle 1989. And that's exactly where you get that price rebound. So that would have been ideal for you to scale in the market, because if you look all the way back, you can see that's your last clear reactive zone, right? Now, if you swap onto the monthly, okay, we just reset this chart, okay, you can see that obviously we fall away. So you've seen the reaction before. You've then got to decide, okay, well, do I want to be long or short? I've just come up from this previous dip in the long uptrend, okay, and where do I want to be? Do I want to be long? Yes, as you would have. And you see price come up from 78.5 to 99, which is an enormous way, okay? Then price drops and you have the choice again. Do I want to be long or do I want to be short? Price comes down from 98 or 99 almost, all the way to your 86 or 87 point. And you touch on this previous price action level here and you bounce away. So that is why you would have taken it long here. because there's reasonable price action. Okay. Now, what happens when that rebounds is quite interesting, because if you switch to the weekly, you're then looking for a move from this low, which you had and you should have taken long, up to here. Now, the reason why this candle comes away is because, again, you're pulling into that early resistance. Okay? And that rejects down. And you're left with this space in between. Now, what often happens is these levels are hit either side, okay? And that's because the price comes up away from that reactive support zone and it reaches a level of early resistance, falls away for those short side gains, and you then have the option on how to trade it. Now, given you've just seen it bounce from here previously, it's a good idea to look to the long side lightly because you're going to look for a second touch. And that is exactly what we're doing now. If the price comes down to this former long zone, I'm going to look to lightly long it because I've hit on it already. And if it comes up here, I'm going to look lightly short. And I've got this space in between here to look for price moves and secure gains. Okay? And it's likely, because we're on the monthly chart, that this isn't going to be broken down tomorrow. And you'll probably get a smaller and smaller movement each way over time. Now, it probably won't go on for that long. Okay? So July 23. But it's just to give you an idea, okay? It might be much shorter, most probably it will, but it's just to give you an idea of the movement we're looking for. So your rundown on AUDJPY, you know why it's shorted, you know why it was long, okay? You can see previous price action here, and you just come up slightly and fallen away. And eventually, these levels will break through either side. So thanks for watching, guys. I hope that really helps. As always, let me know if it does or doesn't in the comments section, and come along and come and chat with me. We do breakdowns like this all the time. Thanks for watching, and I'll see you in the next video.